3 minutes have opened, and here you are. You're making a series of lower lows on that Apple short. That was that exhaustion. Opened it up, went up to that 537.78, which is $10 lower than 547, you know, and all. Now, yesterday's low was somewhere right around 516, but hey, they're all back on it. That's how to play that upside volatility, selling into that short, selling out of the long side. Get ready to buy off of those lows, Maryland. You're coming down there, Maryland. 533.80. Watch that IR. That one's setting up right there as it comes down and makes those series of lower lows. Once those lows are taken out in this 6-minute opening bell, you got to get in. It's bouncing right in there. It's coming down and it's filling in the prices at that low of 533. That's a $3 gap premium to the close of 530. Look at that. Look at that. Opening bell. How to buy Apple, how to trade Apple, how to short Apple, and then go long off of the bottom. That's the bottom. And that low was holding by $1. There it is right now. That was perfect entry. And that was perfect recognition, and that was a perfect low right then, and that's how that turn worked. On the opening bell, we have price line chart right here. Here's that super volatility gap right up to that 638. You can see here at the bottom, 635 would have run. So there's that one, as we're just kind of like going through some things very quickly. Here's the Apple reversal that MMT, new MMT, called out. And you could see that lower teeny line right to the teeny. And you can clearly see that support level, and it's running right back up. It's going to challenge those highs, and this is all in 9 minutes on the opening bell. And that's on Apple Computer, going back toward the highs. Over here on the Google trade, well, Google's a little light. On the 9-minute opening bell, you can clearly see that teeny resistance level, and it's a teeny script, 1, 2, 3, right to the penny, with a 1, 2 teeny reversal going back toward the top. So that's how that one's working. There are many more that you need to be familiar with, and the ones that you're going to look for is this Amazon. That one you want to watch because we're also going to be watching CME and ICE. On this 9-minute opening bell right here, of course, this is a Netflix open bell right here. You can see that teeny resistance level up there at those highs. Let's go ahead and get those teeny lines in there. And there's that support level. And you can see that you're selling into the half bars as you put in the 9-minute opening bell level between the buyer and the seller. So basically, you got an IR of 29. That's that short at the high that we talked about, and what a nice trade that is. And that's that support level buy to cover. Now, what you're going to look for, do you break the low and stay on high alert with that Netflix trade? Okay, as it goes back up to resistance and it fails as it did there. We have a high, 609.8. We have a 608.722 pullback. You can see the bid and the ask on the Google trade. It's looking nice. You're going to short Apple? All right, so you're shorting Apple back into that resistance level. Now, that is exceptionally nice, Maryland, because look what you just did. You got that teeny resistance right to the teeny line. Right there on that 9 minutes. That is, if this is populating correctly. I'm doing the diamonds. Nice. So, what else? That was a nice one off of the bottom. It's a $2 rally off of the bottom. All right. The 606.79 on Google will come into jeopardy. The Netflix is coming back down to test its lows. So some of these higher beta ones are on course. Let's just take a look here at the CRR trade that was featured. It's been a chop shop. It had a nice breakout yesterday. We won't have that on our list today, though. So we're going to just watch how that opening bell consolidation. You broke another low, Mr. Gibson. Netflix is coming right down, and once again, what we would like to highlight on this opening bell, 10 minutes, is how to short those opening gaps. Netflix, we did that. Opening bell, short that gap, and look at that teeny reversal. Look at that right now. You can see how the high was 1.20. That equaled $4.31 that you were shorting, and you're getting those pennies that were once there. You can see how much you're making right now. It's 244. You'd have to buy to cover. Right here at the lows, you would cover half of the position on the short side. Mr. Gibson, that thing held it, man. It got down to my price. You're in it, aren't you? You should have got hit. Here we go. We have a 30-minute opening bell with MMTs, and how nice it is. There was wonderful trades off the bottom in Netflix. There was all kinds of position management squaring. There was everything about pre-market gaps, opening gap, exhaustion reversals, meaning that you sell short to support and then you go long. You can see the ranges here on some of these on Google, and you can see that we have people that are just short right off of those highs. As we said, that lows get put in. We're watching the Apple when we are short and then buying calls on the bottom against that short. So that way we got 530 calls working for us. That's what MMTs are looking at. Lower highs within a 31-minute price channel. Great trades, great entries, great exits, great observation. Letting markets come to you and letting markets set up for you. Here's that 540 put right now. You can see that range, that low, $7. Here's the thing. We know that the bid is 1045 by 1060, and we know that they're marking the 540 put in the money up, and it's a weekly and expires this Friday, right along with the jobs report. Opening bell 30 minutes have gone by.